welcome everybody to today's fourth EBI policy series. Today is about the introduction of the program of the Portuguese government for its EU presidency in the field of banking and financial markets. And I'm very happy to introduce in this regard Secretary of the State of Ministry of Finance, João Nuno Mendes, who's our keynote speaker today. Welcome, Mr. Mendes. And I also would like to welcome as the co-discussants, first of all, Noose, who's the Managing Director of the European Savings Bank Association and the Global Savings Bank Association, and Professor Luís Morais from the University of Lisbon, plus Academic Board of the EBI. Welcome to all of you, and also welcome to the speakers. My name is Gstädtner. I'm the President of the Supervisory Board of the EBI. If I may quickly introduce to this topic and then also introduce the speakers a bit more in detail. Portugal is holding the EU presidency now since the 1st of January 2021, and it's having the normal rotating EU presidency for the fourth time since Portugal joined the European Union in 1986. I guess, if I may say so, when it was clear, or when Portugal started to prepare its presidency for the European Union, they had probably some different topics in mind, but now for more or less 1 year, Europe is dealing with the impact of the COVID-19 crisis, which probably has also affected quite a lot the planning and the details of the program of the Portuguese presidency. The European Banking Institute has been starting this series last year in summer when Germany had its presidency. So Secretary of the German Ministry of Finance, Jörg Kukies, was presenting in this regard as well. And now we are very happy that Portugal is following up on this session. It is part of a trio, I understand, of 3 European member states, followed by Slovenia, which is holding the presidency after Portugal from summer 2021 onwards. If I may now introduce all our speakers in a bit more detail. João Nuno Mendes is Portuguese Secretary of State of the Ministry of Finance. He was an auditor of Arthur Andersen at the beginning of his career, and then served as an advisor in the office of the Prime Minister of Portugal. He served then as Secretary of State for Planning, and moved into the private sector by being financial director of Amorim. Afterwards, he was director for development and international business of Galp Energia, and then chairman of the board of directors of Aguas de Portugal Group. He holds a degree of management from the University of Lisbon. So welcome again to this event. If I also introduce our co-discussants who will reply once Secretary Mendes gave his keynote speech. First of all, we have here Noose from the European Savings Bank Association. He holds a master's degree in economics and finance from the Flemish University of Brussels, and he began his career in a Belgian savings bank, which he became advisor to the chairman. From 1980 to 1995, Noose was chief executive officer of Belgian Savings Banks Group. And from 1994 onwards, he took the post of managing director of the ESBG in the WSBI, the European Savings Bank Group, and the World Savings Bank Association, which is holding until now. He is also giving lectures in finance and macroeconomics at the Institut Supérieur in Ghent. And then Professor Luís Morais from the Lisbon Law University and the EBI, very welcome as well. He's a full professor in Lisbon Law University and John Monnet Chair of EU Economic Regulation. And besides past institutional affiliations, he is currently the vice chair of the appeal panel of the Single Resolution Board and chair of the Supervisory Council of the Portuguese Insurance and Pension Fund Supervisory Authority. He's the founder and chairman of the Research Center on Regulation and Supervision of the financial sector, which is based in Lisbon, the CIRSF, which is also an academic partner of the EBI. Luís Morais is also a member of the academic board of the EBI and acts as attorney of law. Very welcome to you as well, and to all of you. To all our listeners, again, we have a Q&A tool, so everybody can also ask questions to any of the speakers today. We will start with around about 15-minute presentation by Secretary Mendes, followed by around about 5 minutes replies from Noose and Luís Morais. With these words, I thank very much you again, and would hand over to you, Secretary Mendes.
For the Portuguese to make the presentation of the financial and economic objectives of the presidency. And we have a presentation prepared. I don't know if it's possible to...
I will share it right now, 1 second.
And my greetings also to the to Noose and Luís Morais that are going to participate, and I'll be glad to answer to any questions. So next slide, please. So these are, you know, the pillars of the Portuguese presidency. So the objective of the resilience, the twin transitions, green and digital. So the main action lines. So and then the social and global element. As regards the main action lines, which is the following slide. So next slide, please. So the main objective is to, of course, to foster the recovery and the cohesion in European values. So we need to be aware, as it was mentioned in the beginning by the President of the Supervisory Board, you know, we need to be aware of the context and of this crisis that we are going through, and so it's going to be very important for us to speed up all the efforts related to the approval of the recovery plans of each of the countries. So that's going to be one key priority of our presidency. So it's quite a huge effort. So there is a 2-month period for the assessment and evaluation by the Commission, and there's 1 additional month for the other steps for approval. So we think that we are going to be very busy in the first half of the year, you know, promoting this collective effort for us to have most of the plans approved by the end of the first half of this year. So secondly, promoting the EU as a leader in climate action, to accelerate the digital transformation at the service of citizens and businesses, and also to enhance and strengthen the European social model, and finally to promote a Europe that is open to the world. We have a number of challenges, global challenges, where Europe may act a very important role, and it's very important to keep our competitiveness and to increase our competitiveness vis-a-vis other players, which are extremely active and extremely competitive in the economic and financial arena. So next slide, please. So I already mentioned, so as we come to the ECOFIN main priorities, so the relaunch of the economy and the implementation of the recovery plan for Europe is really the main priority. Then the strengthening of the economic and monetary union, and finally we have a number of challenges, and we have a number of key legislative initiatives related to the digital and green transitions that will have their momentum during the Portuguese presidency. I will mention that in more detail later on. So next slide. So as regards the relaunch of the economy, I already mentioned the importance of the approval of the recovery and resilience plans. It's also very important to keep in line with what's happening in the different economies as regards the impact of the COVID crisis, and so the follow-up of the crisis response and all the recovery prospects need to be evaluated. So we are going to move forward with the NPLs related initiatives. So in the first ECOFIN there will be a presentation by the Commission of the action plan on NPLs. We should see them in the context of the financial stability that we need to preserve, and of course to take into consideration the context of moratorium, the context of the public guarantees will be very important for us to take proper action regarding specifically to the Commission's initiative. There's a lot about strengthening and giving transparency to the NPL's secondary market. We think that there will be in the second quarter room to restart the discussion on the medium-term fiscal rules framework. So the first priority should be, to assess the fiscal context that we are living now and that will be projecting for the year 2022. But we think that there is important work that has been developed, for example, by the European Fiscal Board that we need to preserve in the discussion. So we'll restart this discussion. The objective is not to create divisions between the member states, but to get back to the discussion, which is also very relevant for our credibility vis-à-vis the financial markets. So next slide, please. So the advance of the discussions on the banking union, that was a very important achievement in the last Eurogroup of the year with the approval of the ESM reform treaty, plus the approval of the early implementation of the common backstop. So we think there is the room for us to make more progress during this first half of the year. So our intention is to progress looking to the different pillars of the banking union to try to go ahead in most of the elements, most of the pillars that comprise this banking union objective. We also think that considering the risks of the transmission of the crisis from the non-financial to the financial sector, as the crisis unfolds to new chapters, we also think that the financial markets are going to be keen to see that we address this expectation of further process in the banking union. So then we have also the need to advance the discussions on the capital markets union. So there will be a state of play in one of the ECOFINs of this first half of the year to see where we stand. We feel that there are some actions that the capital markets are waiting for with a lot of interest, like for example the European single access point, which is about to make more information available about the European companies, the small and medium companies, more information available and more harmonized data about those companies available, because we feel it's going to be very important to use these capital markets also to address some solvency specific problems that this crisis may bring us. So the start of the discussions on the Capital Requirements Directive and Regulation will also take place. So we need to be aware also as we progress these discussions about the context that we are living at the moment, where we had some relaxation of the capital requirements, precisely for us not to have a pro-cyclical approach, which would be very damaging for the European economy. And there will be the start of the discussion of legislative proposals on preventing money laundering and terrorist financing. So next slide, please. There are some other elements. So as regards the digital finance package, we have been having some online talks with some of the players in the financial arena, and there is a lot of expectation as regards some of the initiatives that are expected, like MiCA and DORA. We can talk about them also in more detail later on. We also hope to address the discussions on the renewed sustainable finance strategy that is going to be presented by the European Commission. There is also a lot of expectation as regards, the directive related to non-financial reporting, because there's a need to get harmonization of data. So if we want to mobilize more private capital, for sustainable projects, it is absolutely crucial for us to harmonize the way the data is provided, the way you can evaluate if a certain project, a certain company, a certain action is sustainable or not. It will be also very important to start the discussions on the introduction of the new own resources. So we know that the EU will need to have the capacity to reimburse the funds that it will be borrowing from the markets in order to finance the next generation EU. So there's an expectation so that we can progress on this area. So a number of options has been discussed, such as the carbon taxes, emission taxes, plastic taxes, digital taxes. So I think that this will have progress during the Portuguese presidency. Then we have, all the work that has been carried out to tackle, the tax challenges related to the digitalization of the economy. This is something where, the current discussions and negotiations at the OECD level will play a role. So it's going to be very important that we can progress such discussion, leveraging, a renewed relationship with the US after this result of the election. So we hope that this will get some momentum, this discussion, also because we have a new American administration. So, and the Americans are going to be a key partner for EU in this action. So the strengthening of the administrative cooperation and the fight against the tax fraud and evasion. There's a number of initiatives about strengthening the administrative cooperation, which is also, enabled by the new technological and the new platform capabilities that we have at the moment in each of the countries. And the follow-up on the Customs Union Action Plan will make part of these priorities. So next slide, please. So we will have a high-level conference in June that we call the Recovery Summit. It's going to be a ministerial level conference, and we hope that at the moment we have a significant number of recovery plans already approved by the member states, and it will be also a moment for the EU to present the results of its action as regards the objective of the recovery in the context of a crisis that we hope at that time we already that we already overcome, we hope by that moment, or at least we have it under control. So there will be a number of online talks between February and May. We need to adapt to this circumstance. So they will be subject to the three themes. The first of all, recovering the economy, strengthening EMU, and the twin transitions that we already mentioned. So from of course from the financial point of view. So we are still drafting those agendas together with the European Commission, and it will be great to have your presence in those online talks, and that you could participate, and all the members to participate in such online talks. So I think this is the last slide of the presentation. Thank you.
Thanks very much, Secretary Mendes, for this presentation. We will come to the questions after the co-discussants gave their basically replicas to what you have been saying. If I may, I would start with Chris Noose and would hand over to you, Chris. Thanks very much.
Thank you, Thomas, and thanks to EBI for inviting us, ESPG, to comment on the program of the Portuguese presidency. I think, as far as I could see, it's a substantial program, and I would say it's even not only substantial, but it's also challenging. And this means that you are not only before challenges, but also the banking industry and also the savings banks industry has a lot of challenges to face. And above those challenges that were normal, we have now also the COVID-19, which is also above all those challenges. To name just a few challenges, this is the low interest rate margins for savings banks, the digitalization and payments, because there's also a lot happening in Europe on payments. I think the Portuguese presidency did not take this up in the program, but there's a lot happening, especially around instant payments and the European Payments Initiative, the cloud. I could mention a lot of them. Sustainable finance, as you mentioned. We have increased competition from fintechs, for example, which are not submitted to the same regulation. NPLs, you have mentioned this. Basel, indeed, we hope that it will not become too expensive, Basel, regarding capital. So, and also for smaller institutions, decentralized institutions, heavy regulation. I think this is also a challenge, the heavy regulation. That's also why we are insisting for proportionality. But I will go on because Thomas told me we have only 5 minutes to react. So I will give some comments on some of the topics that you have mentioned. Regarding the resilience and the recovery, I would say we welcome as ESBG the extraordinary measures that were already introduced by the European and international authorities following the rapid spread of the COVID. I know I'm speaking about March 2020. But the pandemic, as we mentioned even a little bit before the meeting, is far from over. And a second wave of contagion has just started to spread all over Europe. And the restrictive measures currently being reintroduced by national governments are likely to negatively impact private households and the real economy. Banks might, as a consequence, face higher NPLs and higher provisions. But in any case, we expect to be able to continue supporting the clients, or our members supporting the clients during and after the crisis. But it's a challenge for the banking sector as a whole. In this respect, we believe that in order to allow a smooth continuation of the bank's financing activities, and particularly towards the SMEs and households, EU institutions should implement all the necessary measures such as temporary capital and operational relief, a complete reassessment of the implementation timeline of existing and upcoming legislations, and in general, more flexibility to also meet banks' needs through the crisis. I think we are all in the same boat. In the crisis 2008, I think the banks were a little bit, the cause of the problem, but I think now we are in the same boat and we can help a lot. So we help and we try to help. Regarding digital finance, we support overall the decision of the European Commission to take action through the digital finance package, which supports digital transition in the European Union, and relatedly, the pandemic has accelerated digital transformation and consumer expectations. Digital technologies prove particularly important for the recovery of the European economy across different sectors, including, of course, financial services. In recent months, we have highlighted the following main obstacles to a full deployment of the potential of innovative technologies in the European financial sector. And this is one, the regulatory fragmentation. Secondly, the unlevel playing field. Third, EU global competitiveness. And four, lack of digital skills. And therefore, we think that any key initiatives in digital finance need to include, in our opinion, some conditions. First of all, strengthening a European digital payment solution. I spoke about that in my introduction. Secondly, adaptation of the European competition law to the reality of the digital economy, which is characterized by powerful digital companies, especially, as you know, from USA and from China. Third, introduction of rules to prevent large, vertically integrated platforms from discriminating against product and service provision. Fourth, investing in technological infrastructures, enabling digital coverage and education. I think you mentioned this in the program, education. I think education, digital skills is very important. Regarding a renewed sustainable finance strategy, in our opinion, the EU legislators should prioritize the completion and implementation of the many rules that are already developed and ensure the consistency of the sustainable finance framework. In my opinion, the EU should support the development of more structured actions in the area of financial literacy and sustainability. And doing so, it can raise awareness and acknowledge of sustainable finance among citizens and finance professionals, rather than providing detailed guidance through regulatory intervention. Another issue is the lack of available data and the costly purchase of non-financial information by data providers. In the opinion of my association, the European Commission should build or support a central European ESG free of cost or low cost data register. The EU legal framework should also promote the social aspects, and I'm happy that you mentioned this, the social aspects of sustainability in banking, and I would say according to the United Nations Sustainable Development Goals. The acknowledgement of social bonds and respect of the principle of proportionality, as well as the EU better regulation agenda, could play, we think, a key role in it. And last but not least, the Commission should focus on developing an EU social taxonomy. So this is some short remarks. I could go on the CMU and other things, but I think Thomas would be angry on me if I continue further, because his program would collapse. Thank you, Thomas.
Thank you so much for your statement, and we will come back to some of these topics later on in the discussion. I would then hand over to Professor Luís Morais, who is a good friend of the EBI and of myself, and I'm very happy that you're participating here today in this conference. So I would hand over to you, Luís, for your statement.
Thank you, Thomas. Good morning or good afternoon to everyone, depending on the time zone. I would like to thank Thomas for this initiative in the context of our close scientific cooperation. I would also like to thank first the Secretary of State, João Mendes, for a most interesting keynote presentation, and also for his availability for this discussion with the pressures of office, and I would dare say the accrued pressures of the presidency of the European Council. I will organize my remarks basically as a set of further questions to the Secretary of State, João Mendes, in the interest of discussion. So please take with leeway the observations and mainly questions that I will try to put forward. And bearing in mind the content of your most interesting presentation and also the reference in the program of the Portuguese presidency of the priority of deepening the economic and monetary union, including namely banking union initiatives, in that context, referring in particular the establishment of EDIS, the European Deposit Insurance Scheme, I would venture to ask you if you could elaborate a little further on these initiatives, and especially perhaps on EDIS, the European Deposit Insurance Scheme, considering the high sensitivity, legal, political, and also economic, and I would say an accrued sensitivity in the context of the COVID crisis of the development of the European Deposit Insurance Scheme, with various approaches that have already been tentatively considered to envisage a working and feasible EDIS, but failing so far. So we would be most interested to know your views about how to progress further on this. But anyway, if you want or could elaborate a little bit further, I would say on a holistic perspective, more widely, I would ask you from both a legal and economic perspective, what do you consider necessary for a functioning banking union in the short to medium term, and considering the range of initiatives that the Portuguese presidency may consider at the current time? In the interest of time, I will try to be very short and respect my 5 minutes. I would try to concentrate my main queries now, and I would also venture to ask you for some further thoughts about the relaunch of the Capital Markets Union. This is also explicitly mentioned in the key goals for the financial sector of the program of the Portuguese presidency. And there has been, I would dare say, some pessimism or even a widespread pessimism in certain quarters about the relaunch of the Capital Markets Union. So I would ask you, how and in what terms do you envision room for progress in this domain? And I recall by coincidence that in Portugal, we have had an interesting discussion in September and October about a report from the OECD on Capital Market Union Review of Portugal 2020, so mobilizing Portuguese capital markets for investment and growth. It was an interesting discussion which led to some policy recommendation. And perhaps you could put some of those aspects that were then discussed in an European context, and discussing some of those aspects, namely in the context of the relaunch of the Capital Markets Union project. But in the interest of time, I'll stop here, and if we have time, I will try to come back to these and other topics. Thank you very much.
Thanks so much, Luís. And there are already several questions that you have been raising, but maybe because you were asking these questions, first of all, to Secretary Mendes regarding EDIS, what is the plan of the Portuguese presidency in this regard? I mean, maybe if I can add one point, there was a proposal about 1.5 years ago from the German Finance Ministry to move ahead with EDIS, based on particular conditions, and one obviously which is always raised in this regard next to the risk sharing is also a risk reduction, and due to the fact that banks are actually increasing risks at the moment, the question is always, do you see any progress being made with EDIS in this current circumstances? And then maybe also the questions that Luís was asking, maybe we can start with this round of questions. We also have already the first question in the Q&A tool also related to EDIS, but maybe I would hand over to you, Secretary Mendes, for this particular question.
And also Luís Morais. So our objective to participate in these online talks is also to get, you know, the best advice and the best experience of you all in these subjects. So as regards this question about the EDIS, so we are aware that the banking union, it's sometimes a difficult discussion between the different member states because of the different characteristics of the banking system in each of the countries. So we need to, for us to progress, we need to be aware of these differences to try to make bridges. So there is, there is a current. We think that in order for us to advance, we need to have this holistic approach where we move, you know, we move ahead in the different dimensions. So I remind you all that the different dimensions are crisis management, financial stability, EDs, enhanced cross-border integration, and the regulatory treatment of sovereign exposure. So there's a number of countries that think that we can only progress if we go ahead in all these dimensions at the same time. So having that holistic vision in mind, we think that it's necessary to develop the works towards this view that, such as you, Thomas, presented the hybrid model for EDIS. So we think there is some ground for us to progress in this area, and in the first moment there is more ground to progress as regards the liquidity stage. So we think that will be an area where it would be easier to make progress, since the loss sharing element is more complex. So our idea is to start first by the liquidity stage in the discussions. There is an ad hoc working party, which is part of the high-level working group that it's going to develop work more on EDs, on this hybrid model. We also think that we need to create some bridge between this hybrid model for EDs and some challenges that we do not have addressed at the moment as regards the crisis management framework. So we must take into consideration that there is a number of banks, like small and medium banks, that we need to monitor, their solvency, we need to monitor their NPLs, and so we cannot forget that they are part of the banking sector European landscape. So, but of course, we think that, in EU, we need to progress step by step and with bridges between the different views and being aware, that the countries have different banking sectors. So I don't know if you want me, Thomas, to talk a bit about the relaunch of the market union, or do you want of the capital markets union, or do you want it to leave to a later stage?
No, that's a good point. We can also move ahead to capital market union, and I would also try to bring Chris into the discussion. We also have one question. Maybe I can ask here from the audience, which was regarding the potential increase of NPLs and insolvency and the relevance of capital market union and the insolvency laws across the EU. Is it possible to know more about your plans in this regard? Yeah, capital markets union, insolvency laws.
Yes, so we will be following, the roadmap that was presented by the Commission as regards the capital markets union, and you have precisely their measures related to the insolvency or harmonization of the insolvency procedures according across the EU, and there are a number of interesting elements in such roadmap for the capital markets union, like, for example, Action 4, which is about the appropriate prudential treatment of long-term SME equity investments by banks, which is something that may be important in the context that we are facing now with a potential increase of the NPLs. I already mentioned that this European single access point can be very relevant for the increase of the visibility of SMEs all across the capital markets in European Union. We think also that we should not take the look to this action plan as if we were not living in a very competitive world, because when we are talking about with the different associations of financial players, not only banks but also asset management companies and other players, we feel that, as it was already mentioned, I think by Chris, we are going through a technological revolution, and so we have the competition of the American players, we have the competition of the Asian players, so there's a pressure for not to over-regulate in a way that we can become uncompetitive. So we feel that we need to be very careful, to see, of course, we need to fulfill our objectives as EU. We need to protect the final, we need to protect the consumer, but it's also very important to address this point of the competitiveness of our financial industry in EU as a whole. Since this technological element of is like a revolution. I think that Chris was mentioning that people got more demanding as regards the services, the technological services during this COVID crisis. Of course, we have an acceleration of the technology deployment, but we need to be aware that this reshape of the competitive landscape is taking place in every industry. And so there is this speed element, there is this urgency, the sense that we need to have when we look to the capital markets union. Otherwise, you see, we think that there are going to be some elements that are going to be disruptive in the global arena, and that will create further pressure on our competitiveness.
Thanks very much, Secretary Mendes. the capital market union, also banking union, always seem to be a key ingredients of a fully fledged European monetary union, as key elements in order to have risk stabilizers. So it's one of the points very, very crucial in this whole development. Chris has been speaking about this before as well, so would like to bring him into the discussion right now. Chris, if you don't mind, what is your view in relation to the importance of a capital market union for integrating European banking markets?
Thank you, Thomas. Well, I think that the latest CMU action plan, to be honest, is certainly going to be helpful and to make Europe's capital markets more integrated. But I also think that the way to go is still long. As you mentioned, it's step by step in Europe. But the latest proposals are additional and useful pieces of the puzzle, I would say. But very generally speaking, I am pleased to see that there is a shared understanding now, and we insisted for a long time on that there is a shared understanding about the need to develop a deeper CMU next to bank lending. And not only, you should not expect everything, especially SMEs from the capital markets. Bank lending remains important. I think our American colleagues, and especially the community banks, which are a member of the Global Institute, the WSBI, they envy us in Europe. That the bank lending is so well structured, especially for SMEs. So financing Europe's economy only through capital markets, I'm convinced of that, would not work. A smart and appropriate regulatory framework for bank lending is fundamental as well. And the both of them together is what Europe needs to come out of the crisis swiftly and successfully. And I think with the crisis, I think it's important. What we are particularly liking in the Commission's CMU action plan are the two announced actions. And they can certainly help deepen and foster European capital markets. And this is action 1. That the Commission will propose to set up an EU-wide platform, so European Single Access Point, as they call it, that provides investors with seamless access to financial and sustainable related company information. This will be of great importance, not only in the CMU context, but also to boost investments, but also in the broader sustainable finance debate, as I mentioned before. Right now, there certainly is a data gap, and savings and retail banks are also well aware of the crucial role of linking saving and long-term investment, job creation, and sustainable and innovative development. And also Action 7, the Commission will conduct a feasibility assessment for the development of a European financial competence framework. And it will also assess the possibility of introducing a requirement for member states to promote learning measures supporting financial education, in particular in relation to responsible and long-term investing. I think financial education, and you know that savings banks have always paid a lot of attention to financial education. Financial education goes right to the heart of the members of the ESBG, and therefore we are delighted to see that the Commission plans to take action. It has our full support, and financial literate EU citizens are also a constant cornerstone. We always think that financial literacy, it's for outside Europe, but it's not true. As far as we know, still 37 million people in Europe do not have a bank account, 37 million. So it's huge. And I think we have to work on that altogether.
Thanks so much, Chris. If I might also introduce Luís to this discussion here on capital market union. I mean, you have been publishing a lot in the area of financial market regulation in the EU. You're an expert in this field of banking union. From your point of view, also from a legal and economic point of view, what do you consider necessary? Do you consider which elements of a capital markets union do you consider important to create a fully fledged banking union, Luís?
Thank you, Thomas. If you allow me, I would also like to highlight, in connection with your question, of course, I would also like to highlight some of the points that have been put forward by the Secretary of State, João Mendes, which I think are very, very important points. I would note his mention to a hybrid and model of EDIs. I would call it a pragmatic view on EDIs, on a hybrid model, which would consider as a priority the point of liquidity. And also I would note, and here I would start to address your question on Capital Markets Union, I would note his point on harmonization of insolvency law, which is of high importance, I would say, for the Capital Markets Union, although it's a political difficult point to progress in terms of harmonization of insolvency law. I would say that in terms of Capital Markets Union, we should have, again, an holistic view considering different matters which can contribute for progress here. I think that Chris is right, that developing European capital markets will take time. We have to be realistic on that. But some specific elements may count for immediate developments in terms of the Capital Markets Union development. I would venture to raise a point here that has also been mentioned in the program of the Portuguese presidency, and I think that has been mentioned by the Secretary of State Mendes, which has to do with the development of secondary markets for NPLs. And here I would combine developments of capital markets with the context of the current crisis and the emergence of NPLs in the banking sector. And I would venture to ask to Secretary of State Mendes, or to introduce in the discussion, in our discussion, in the context of the development of capital markets, how we could progress in terms of development, further development of secondary markets for NPLs.
Maybe I can, if I add one question, Luís, to you, but also then to Secretary Mendes. Luís, you mentioned right now that insolvency laws are a very, very tricky field to harmonize, yeah? But it's quite important for a fully fledged capital market union, also banking union, to have some work and harmonization in this regard. What do you think of the proposal, which has been discussed at various other occasions already, to develop something specific and unique only for really European players? So, for example, for the banks supervised by the ECB, to have something which is specifically focused only on a particular field, whereas, let's say, for more national players or institutions, that would basically retain a more harmonized insolvency law, not the same one as the one which would be applied to European active institution. I mean, this is the discussion about the 28th regime instead of a harmonization. What do you think about this proposal?
Thomas, being very short in the interest of time and giving still room for further considerations by the Secretary of State, I would say that I would consider favorably an approach which should consider harmonization in limited fields, also in banking. This could be the correct way to address what several players and stakeholders have been commenting as the problem of small and medium dimension banks, which are not consistently covered, I would say, by European resolution rules. And so some sort of progress of harmonization in the field of banking and in specific sectors would be a welcome development, and perhaps would enhance the political conditions for further progress, because I can admit that progress, considering all the economic sectors in terms of harmonization of insolvency law, is politically difficult. So the short answer for your question would be yes, I would see favorably such type of development of harmonization in limited fields, particularly banking.
So much. I would then hand over all these questions to Secretary Mendes, including one other question that I would be very interested in. We talked now about the field of harmonization of the rules, or having another separate legislation specifically for the European banks or financial market players. Another dimension is the question, do we need to introduce something very similar, let's say, to the SSM, but specifically for capital markets? So basically a single supervisor for European capital markets in order to further this aim to create European capital markets. So something comparable to what we have now for banks, to have something similar also for European capital markets. This question, I would hand over to you, Secretary Mendes.
Sorry. So thank you. So first I would address the question of Professor Luís Morais. It has to do with the secondary markets of NPLs. I think that there is a great expectation as regards the execution of this action plan by the Commission. So as I mentioned, it is to be presented in the ECOFIN. So there is distrust in some countries that we feel about, you know, the NPL sales and what are going to be the profits that are going to be made after that by the specialized players. So we understand that there is legislative initiatives for which the trilogue already started, and those pieces of legislation regarding the services are concluded, and now the trilogues are starting to get that specific to get that piece of legislation in force. But as regards the secondary markets, we feel that it is necessary to have more transparency on the transactions, the registration in a common database, such as being proposed in the action plan, to keep track of the full life cycle of the NPL, what are going to be the final profits that are going to be made. So we think also to create some prices comparison, we think that there is room to be made here, even from the point of view of those packages of NPLs to become more attractive to a more significant number of players. So we think that there is work to be done, and for sure, if these secondary markets are going to be more developed, of course, this would be interesting for us all, because the need for the state intervention is going to be decreased. So, so that's our view, and we will fully support, the Commission's effort on this. As regards, the question about the single supervisor for capital markets, so the Council does not have this legislative capability initiative, but we know that in several areas this is already a single supervisor or an important participation of ESMA in day-to-day supervision, such as the benchmark administrators, credit rating agencies, trade repositories, and we expect that this, trend is going to continue in the coming years.
Thanks very much, Secretary Mendes. If I now move to a slightly different topic, this is essentially the key discussion that you have been addressing at the beginning of your presentation about the recovery fund and the usage of these funds, and the discussions which will take place now about the various recovery plans of the countries. The implementation will be key, I guess, in this regard. We had recently the EBI policy conference where also Valdis Dombrovskis was speaking about this topic, and the point very clearly is that this recovery fund was very, very controversial. So I guess the usage of these funds will be very scrutinized, and I guess should be scrutinized properly. What is your idea how this should be done, and how essentially shall Europe or the European Commission introduce, let's say, the necessary safeguards that the supply side reforms in all the European countries, in order to make them more competitive, are going to be implemented properly?
Oh, so from our point of view, this is something which is very well structured and very well organized, so that there is a strong link between the way the recovery plans are going to be structured and executed, and the European semester, which is the process that monitors developments, the macroeconomic developments, as well as the way the countries are executing precisely the country-specific recommendations, what we call the CSRs. So I think that there is a full awareness that's incorporated in the regulation, that the plans are not only about investments, they are about investments and reforms. And also the recovery plans will have also, from the execution point of view, a specific governance, where the EFC will have a special role in the disbursements. And the recovery plans establish objectives and milestones that need to be achieved during the execution in order to guarantee that those disbursements are made, and so all of that is going to be fully surveyed. And so we also need to take into consideration that the recovery plans are going to be approved in ECOFIN, and they will have an assessment, a specific individual assessment by the Commission. So we feel there is, enough elements for structuring such plans and for such execution to be monitored. I would also highlight that, for the twin transitions, digital and the green, there is guidance for, the allocation of the funds in terms of percentage of funds being allocated. So I think that we should be very comfortable with all the procedures that are being put in place in order to guarantee that the funds are going to be properly used, and those funds are going to be available for the different countries. It's not only for some of the countries, and we think it's going to be great to see to compare the best practices between the different countries and the results that they will be achieving if they under promise and over deliver. So we would like very much that they over deliver, and I think that there is quite a context of consensus between the different countries. We haven't seen, the borderline or between north countries or southern countries. So this crisis has been impacting everyone. So every country is being impacted by this terrible crisis. And so I think that there is a sense that we need to help each other and to get to the best solution. So we see also the recovery plans as a way to see what will be the best performance in certain areas in order to get some benchmark and some copy-paste of the best practices. Of course, the countries have different economic structures, as we know. Some of them are more reliant on services like tourism. Some of the economies are more open. But anyhow, each of the countries have challenges that are brought by the crisis. And so we feel very comfortable with that. And I think that we should be all proud of the effort that we are doing. But we need to put the execution on the ground, because we have been told by the ECB, be careful with the cliff edge effect. And as we have the vaccination process moving forward, we hope that we'll get a basis for progressively to run the way the measures are being implemented to avoid this cliff edge. But it's very important to put them in execution. Otherwise, you do not have the macroeconomic effect. You don't have the reforms, investment, combination in execution on the ground. So there's a time and it was very fast, to set up all this legislative process, but now we need to be very fast putting it in execution, because the ECB has been telling us that, fiscal policy needs to play a role. And we are all very committed with medium-term sustainability and sound finance. We have that experience in Portugal. We had a surplus last year, but it's not only about monetary policy. It's not only about the relaxation which is necessary of the capital requirements for the banking industry. Fiscal policy needs to play a role. It has been playing a role. But if we do it through structured investments, then we can make a difference, because we will be simultaneously getting better our competitiveness of the countries, of the EU as a whole.
Thanks so much, Secretary. It's certainly a huge chance to further the digitalization and the sustainability of economy in the European Union by investing all of these monies properly. One last question, also looking at the time, I wanted to raise here. the predecessor of the current finance minister, Centeno, has basically also been working a lot on the question of how the monetary union is becoming or can become more stable. And this is certainly a topic which by various commentators is raised as one of the key points for the next years of the European monetary union in the Eurozone. What is essentially the Portuguese presidency's idea how this monetary union, the EMU, can become more stable, or is there, if I may say, just a huge divergence between the economies, which is per se existing, which is always making the economy in the Eurozone a bit more unstable? What is the view of the Portuguese presidency in this regard?
We think, we think that we have been doing a great progress since the launch of the euro in the integration of the economies and getting more competitive. Of course, we were at a very different stage in the beginning of the year 2020. We were in a very different position, but I think that we are also having the benefit of of pursuing sound fiscal policies. So I think that was a merit of of the work that we have been together in the euro area and across all the EU. So I think that the financial markets have been reacting very positively to the EU action. So there is a time in fiscal policy where you need to get the surplus, and there is a time where you cannot act pro-cyclically. And so I think that monetary policy and fiscal policy have been acting together to avoid this pro-cyclicity that we all feel is the most dangerous way when we are facing a crisis. And so I would say that one way to see it is to look at it from the financial markets perspective, and they have been praising the efforts of the EU, and they are feeling that we have been acting in a very balanced way. Of course, as we mentioned before, for us to achieve to deepen the EMU, of course, we need to go ahead with the banking union, we need to go ahead with the capital markets union, and of course, our SMEs and the companies need to get more competitive across the world. So that's the bottom line. We need all our companies need to be, and our banks need to be more competitive. So that's for me what's key for us, and that process to be balanced across the EU. Thank you.
Thanks very much, Secretary Mendes. And that brings us also to the end of today's policy series. So thanks very much for introducing the Portuguese program in the terms of banking and financial markets for its presidency for the next 6 months. It was very interesting to follow you and also have your presentation. Thanks also to Kristen Noose and Luís Morais for discussing the various topics about capital market union, banking union, EMU with us here today. So I wish all of you a nice afternoon, and we close this event for the day. Thanks very much. Bye-bye.